Hello and welcome back to CEO.CA's Inside the Boardroom. My name is James Fetton and today I'm joined by Michael Rowley, President and CEO of Stillwater Critical Minerals. Michael, it's great to be chatting with you today.
Thank you. Glad to be here.
So if we could kick things off with a quick overview of the company, could you give us the elevator pitch?
Absolutely. Stillwater Critical Minerals, as the name suggests, focused on critical minerals in the Stillwater District, the largest nickel resource in an active U.S. mining district, plus 8 other commodities that are listed as critical as well, including significant copper, platinum group elements. We're growing nicely. We've brought in Ivanhoe geologists and most recently Glencore as well. So we're excited with the trajectory here as we look to become a significant source of low carbon critical minerals in the U.S.
Great. Thank you so much for that summary. And I want to talk about, you mentioned this, 9 different commodities or 8 commodities that are designated as being critical minerals by the U.S. government. And there, as I understand, there is some funding available for exploration for these commodities. Could you walk us through maybe which commodities are a priority? What are you seeing at the Stillwater project? And is this government funding something that you're able to access or intend to access?
Sure, I'd be glad to. Let's back it up to the Stillwater Igneous Complex, which has a history of producing critical minerals in the U.S. We have the entire lower Stillwater complex plus portions of the upper. This district has been producing copper and nickels for over 100 years, long before they were critical. Then chromium in the war years, and this ties into your question about U.S. government subsidies. The government subsidized the production of high-grade chrome from the Stillwater complex in those years. So there's a history of the U.S. government stepping up when needed from these rocks. More broadly, the system is one of the largest layered magmatic systems in the world, highly prospective for a wide range of critical minerals. We're simply applying South African models that have been in place since 1993 at Anglo American's Mogalakwena mine, one of the largest nickel sulphide resources in the world. It's known as a platinum group element mine, but it is actually the largest nickel producer in South Africa. We're simply bringing that thinking to related geology in Montana. It's really not rocket science. It's wonderfully underexplored, and it's wide open across 32 kilometers of strike for exactly what we're doing. Large, bulk mineable nickel copper sulfide with PGEs and cobalt. Key point in that parallel there is that we are next door to the mighty JM Reef deposit, which is currently being mined by Sibanye. Sibanye bought the iconic Stillwater mines. There's production right in the district. In fact, there are 2 mines, 2 concentrators, and a smelter literally right next door. Sibanye is mining under 2 kilometers underground from our biggest deposits at Chrome Mountain. This is a huge plus for us in the district. It also speaks to those South African parallels that we're bringing, where the JM Reef is effectively the parallel of the Merensky Reef in the Bushveld complex of South Africa. Government funding, yes. We are currently receiving government funds in the form of a DOE grant and also close work with the U.S. Geological Survey. That is continuing. I think the point you're getting to is the bigger government funding that's now possible. The U.S. government, of course, is driving, perhaps more than metal markets, the recognition of friend-sourced critical minerals. And the IRA Act, particularly in that regard, has been very good at taking geopolitics out of nickel supply and endorsing, supporting companies that are sourcing within North America, essentially. And that applies to us, and we are indeed pursuing these channels. The short pitch for your viewers is that the DoD in particular will fund drilling, whereas the DOE seems to prefer to fund beneficiation and later stage projects, processing and such. Indeed, watch for more from us on these channels.
Great. Thank you so much for that overview. I want to talk a little bit about the relationship with Glencore. I understand it in April, financing that was led by Glencore. They now own 15% of the company. Could you walk us through the history of this relationship and you give us an overview of that recent financing?
Sure. Glencore, of course, one of the top 5 miners in the world. And they bring really good expertise in polymetallic deposits, which is particularly beneficial at Stillwater. That's what we have. We're 48% nickel by value, but that 52% is copper platinum group elements, rhodium, gold. These guys understand that very well. They bring that global expertise. They also bring their Sudbury nickel sulfide expertise. Working with them has been very positive. They like what they see. The technical committee meetings are actually very positive and quite fun. They indeed took a 9.9% share position last June and then increased that to 15% just recently, as you mentioned. That's a huge stamp of validation, and it speaks well for what we have going forward as well in terms of having a large partner like that. Expertise now and ultimately, potentially, mine-building partner. Someone with the deep pockets and the expertise to actually build a multi-billion-dollar mine, which is where we think this is going. Reminder again that we have Sibanye right next door to us. There are already miners active in the district, and this adds up very nicely, I think, for our shareholders, especially with the U.S. government's urgency.
Yeah, absolutely. Very big stamp of approval to have a partner of that magnitude involved with the project, and certainly unlocks a lot of optionality in the long term in terms of developing it. I want to talk a little bit about your recent drill results you put out just over the last few days. Can you tell us what you're seeing there, and are there still more results to come? Do you have more drilling planned for this season?
Absolutely. This is 3 of 6 expansion holes drilled last year. These are focused on a large EM anomaly, also some other hits as mentioned in the news release. We've expanded the resource nicely in all 3 categories, low grade, mid grade, high grade, with this release. And that's the headline takeaway. Absolutely, all 5 deposits are open for expansion, and indeed the mineralization that we just encountered off the west end of the current deposit areas is also open for expansion. So as you've seen in our images, this is 5 deposits across 9 kilometers, all of them open for expansion to each other and at depth, and set within 32 kilometers of lower Stillwater complex strike. So it's really juicy stuff, and it's frankly easy to add metal at low cost in this district. Subsequent news will touch on the first 3 holes in the end structures that we've been that are in addition to that broader Platte Reef model that we're talking about. That's summarized in more detail in the news release.
Thank you for that summary. In terms of next steps at the company, what are some more catalysts that investors can expect this year, and where do you see Stillwater being at the end of 2024 and in the years to come, a little longer term?
Sure. Drill results are our major catalyst, and we're, as I've said publicly, looking at 2 tranches of results on that in the near term. And I think you'll see some corporate additions as well, and then updates on our non-core projects as well. We do have interest in 4 other projects, obviously the focus on Stillwater, Montana, but there is value to be realized there, especially as markets turn positive finally to growth stage companies like ours. Stillwater remains the flagship, and for very good reason. Everything we've seen there continues to excite us more. So the plans at Stillwater are also a big catalyst this year, and I think you'll see us start to do metallurgy studies and start to put some mind thinking around this. We're big enough now with 1.6 billion pounds of battery metals, 3.8 million ounces precious metals, to start thinking of PEA studies and production level thinking. So I think you'll see us grow this by drilling, primarily by drilling, in parallel to that PEA level of thinking. The government funding piece is there. I can't put timing on that, but we are indeed pursuing that as well.
Sounds like there's a lot in store for the year ahead. I just want to quickly talk about the structure of the company and the management team on board. You founded the company in 2007, part of the Metallic group of companies. Can you walk us through maybe your vision for founding the company and how it fits within the broader group, and what the goals are and the benefits to being a part of a group level organization?
Sure. Yeah, I founded the company to do exactly what we're doing: de-risk assets and move them forward. That started with a high grade production story in BC. We sold that off into a group that was supposed to attain production. In fast forward to 2016, And we maintain a back-in right on that project, I should be clear. Fast forward to 2016, depths of a bear market. I meet Greg Johnson and the team here, and we realized there was a lot of shared vision and a lot of costs to be saved, essentially by shacking up and sharing a lot of those back office costs. So the Metallic Group was founded in that time. We've since added Granite Creek. So it's now 3 companies: Stillwater Critical Minerals, Metallic Minerals, and Granite Creek, all 3 publicly traded. It's essentially a collaboration between the 3. We share trade show costs, we share back office costs, we often share technical teams, resource modelers, that kind of thing. But all 3 ultimately independent and focused around the vision of bear market acquisitions, the kind of time when you can acquire a district scale project inexpensively and then build it out into an improving market, de-risk it, and ultimately look for real value, the kind of multiples that shareholders like to see. This is all following the NovaGold playbook that Greg Johnson was a big part of in the previous commodity cycle.
Great, thank you so much for that overview, and certainly interesting to see those operational efficiencies when you pool resources like that and the successes it can bring. Just to wrap up, is there anything that we haven't touched on, anything that retail investors should keep in mind when they're looking at Stillwater Critical Minerals?
The thing that frustrates me with the retail market right now is the obsession with high-grade discoveries, especially in the copper space lately. These things rarely become mines. High grade is a famous way to go broke mining. What the Glencores of the world want to see is what we have, which is scale. Not necessarily low grade, but bulk tonnage. And that's what Stillwater offers, and we're doing it in a district that has a history of production, in fact, a history of government subsidies, and is currently producing and even expanding. So it's a pro-mining area. Those pieces are so important. The market right now seems to be, maybe it's finally shifted in the past couple of weeks, but it really seemed for a while to be trying to jump from high-grade discovery to high-grade discovery. This is like chasing ambulances. It's a famous way to go broke. It would be nice to see people just take a position in things that look like they're going to go long-term. And I would look closely at companies like Stillwater that have been vetted by a major and have seen repeated investments by a major.
Well, Michael, looking forward to more updates from Stillwater throughout the year. Thank you so much for joining us today.
You bet. Thank you.